Where is this going to lead? Where? We're going to get economic recovery?
No.
Are people going to buy mortgages? What happens,
It's going to lead to disaster. No, you're right to bring up Argentina. A lot of people bring up the example of Japan. We're not going to follow in Japan's footsteps. They're a wealthy creditor nation. They have a high savings rate. They had a trade surplus. We're going to follow in the footsteps of Argentina. So if you want to look at America's future, go look at Argentina's past. This is what is going to happen. You know, all we're doing is creating money. Asset bubbles have burst. Real estate prices have to fall. Companies have to fail. This phony service sector economy has to be allowed to unwind. We have to let the free market function. If the government simply tries to manufacture savings out of thin air and get people to go deeper into debt to buy more products that we can't afford, they're going to destroy our currency. Look at that chart of the dollar.
Peter, why do you think that the very distinguished Bob McTeer and the very distinguished Wayne Angel don't agree with you? Where's the disagreement?
Look, they've been wrong for years. You know, they didn't see this train wreck happening. It was right in their face. You know, I've seen this disaster. I wrote a book about the coming economic collapse. So they haven't understood these dynamics.
Let me get a response. Let me get a response. Wayne Angel, please respond to Peter Schiff.
Well, that's just sheer nonsense. The fact of the matter is that we are not in 2002, but we in 2008, moving into 2009, we are in a serious global falling commodity price movement.
No, we're not.
And the Fed, well, we are, and the Fed is taking the action it needs to take.
No, it's not.
And Bernanke will not be a Greenspan who will leave the ease on too long.
How do you know that? Bob McTeer, how do you unwind? How does the Fed unwind? How do we unwind from this unprecedented government intervention?
You don't go immediately from money creation to inflation. The money's got to get spent first, and nobody's spending any money. Everybody's slowed down the velocity. Everybody's hoarding. The financial institutions are hoarding money.
Did that remind you of the current situation? I'm delighted. I used to spend some time in Buenos Aires, but it was when they were pegging to the U.S. dollar and gold. We're doing neither.
Larry, I think you have to give the Federal Reserve a little bit more credit for thinking about an exit strategy here. Peter, just give me half a second here. I'll be done. There are several programs the Federal Reserve has put in place that basically unwind themselves. And they offer interest rates that are not competitive in a more normal market, but they are competitive and actually advantageous in this very frozen up market. Let me give you another example of the TARP here. The TARP money is a dividend of 5% for 5 years that goes to 9% after the 5th year. So there is an incentive there for a bank to come forward and take out the government in the 5th year. There are several programs here that have embedded exit strategies.
What about the, okay, that's an interesting point, but Brian Westbury, I don't know about those incentives regarding commercial paper. And
5
now
years
we have
is a long time.
These consumer loans, you know, they're going to buy the asset-backed consumer paper and so forth, the mortgage-backed paper. I mean, Brian, I guess the basic question here this evening is, will this work? Will this work? Will this get the American economy growing next year without inflation?
My belief, my sincerest, deep down to the bottom of my heart belief is that mark-to-market accounting is killing us, and that everything the government is doing is to try and offset the damage that mark-to-market accounting is doing. They're injecting capital into financial institutions when mark-to-market accounting is erasing it. They're buying assets, they're pushing money to the Fed, expanding the balance sheet when private sector companies won't hold these assets because they're afraid they're going to get marked down.
But it's not the accounting that's bad, it's the assets.
Peter.
I agree with Peter Schiff on this.
So I believe that mark-to-market accounting is killing us, and we're doing all of these things to try and get around it.
Now, that's like blaming your fever on the thermometer. I mean,
no,
the problem is the assets.
That
yes,
is a lousy. That is a terrible analogy.
No,
it makes no sense whatsoever.
Well,
None
you
whatsoever.
think these assets are so valuable? You buy them.
Why would I buy them when they're going to get marked down in my face?
Why would you buy
the government intervention? There you go. You just said it. That's it.
Go ahead. Say it again.
The fact is that Brian said, why would I buy them when they're going to go lower? Hence, the presence and the footprint and the shadow of the government keeps the vultures in the system for doing what it does best.
But no, that's not true.
I just want to know, gentlemen, this is something that bothers me. I have been a proponent of easier money up to a point. Now, the Federal Reserve, which distinctly clearly mentioned its own balance sheet. That's how they're going to operate. It's sort of a Milton Friedman-like policy. Expand the balance sheet, pump in a lot of new cash. Look, gentlemen, Wayne Angel, you first. I want to get a whip around. The Fed has expanded the balance sheet from $900 billion to $2.2 trillion. They've done that in a couple of months. They may go to $3.5 trillion. When is enough, Wayne Angel?
We have never seen the kind of excess reserves in the system the Fed has in today. But I just guarantee you
wouldn't that be
Chairman Bernanke is going to pull those back as soon as he sees the first signs of rising prices.
Real quick,
Larry.
Whip around. Peter Schiff, real quick, and then Brian, and then Bob McTeer. Real quick, whip around, fellas. I'm out of time.
Yeah, the idea that they're going to be able to raise rates when they finally see inflation is nonsense. If they won't raise them now, they'll never raise them. The longer they wait, the harder it's going to get. They're just going to keep lying
Brian
about it.
Westbury, did Ben Bernanke sign on to Team Obama today, basically? Is that what we saw?
Basically he did. But one thing to remember about this expansion in the balance sheet, it is not all printing money. In some cases, they borrowed money from the Treasury and bought assets. That just expands the balance sheet. It's not printing money.
Bob?
And when they take reserves from banks and buy commercial paper, that's not printing money either.
Bob McTeer, I need you to tell me, how are we going to unwind this unprecedented government intervention by the Fed?
First, let me say that Brian's absolutely right about mark-to-market. And secondly, you keep priming the pump until some water starts coming out.
And what happens?
And then the ship sinks.
Yeah, we may have to end on that.